So we're talking about the MetaTrader 4, right? So talk about the basics. We'll look at the MT4 platform, how it is being used. We'll talk about how to customize it. The main essence of that particular session is to familiarize ourselves with the platform and to know what to do part time on the platform. On the platform, we look at how to create order, how to stop order, how to set stop loss, how to take profit, how to customize, how to add indicators, how to use expert advisors. Expert advisor is also the same thing as robots. How to screenshots, how to draw on the charts, you know. So we're talking about a lot of different things on the MT4 platform. So there are other platforms also, okay, but for the sake of this training, we'll be talking about the MT4, all right? We'll also be looking at how to create a trading account. Okay, we have the demo. That's the accounts that you trade with virtual money. In fact, everyone that is just starting with Forex trading, it's advisable that you start on a demo account. All right, so we'll look at how you can actually create that. Okay, we also look at how you can create a real account. All right, and then we'll look at examples of some brokers, especially those who are friendly with us here in Nigeria. Okay, so we'll look at some examples. All right, then we'll also talk about trading psychology. There's a mindset you need to have when you are trading. Okay, like I told someone last week, right? One of the guys I trained some time ago, you know, these have been trading and then they had been profitable. Okay, and then suddenly he came across one strategy. He said he decided to dive away from one of the basic principles that I taught him, but I told him to beware or to be careful. All right. For example, you see a lot of people trading Forex and they will tell you that you can make millions in a day and then you can make a fortune in a day. And then they also tell you that you can lose all your money in a day. That Forex is very risky, you know. Yes, there's an iota of risk in it, but you can limit your risk. Okay. So what is in it is the ability for you to be able to manage your money well, manage your risks well, and then you make profit out of the market. Forex is a short form for foreign exchange. It's a very large market. It's a global market. Okay, it's $1 trillion daily market. So trillions are being traded on the market every day, and you can make your own profit off it. But one of the undone of so many out there is greediness. You know, a lot are so greedy, they want to make a whole lot in a day, and then because they are being greedy in the market, they end up losing their whole money. All right, so we're talking about the psychology, the mindset you need to have as a trader. So it's one thing to have the skill, it's one thing to perfect the skill, it's one thing to have knowledge, to be grounded, but it's another thing entirely to have the right mindset to hit. If you have the right skill, a working skill, and you don't have the right mindset, I mean emotional, if you are not emotionally all right, okay, you're going to lose money. And then the idea around this, why we are learning this, is not to lose your money. Somebody chatted me up and said that I started trading before, I lost my money. But what we are doing here, we are not just learning. Now, see, we are here tonight not just to learn how to be a professional trader. It's one thing to be professional, it is one thing to be a professional, and it is another thing entirely to be profitable. Okay, so we are here tonight to see how we can be profitable Forex traders. And I hope that we all go together and enjoy the journey as we learn about Forex trading. Okay, and other things we'll be looking as we progress is risk management, we'll be looking at money management, we'll be looking at candlestick pattern. All right, this is actually one of the best ways to learn Forex. Okay, a lot of people make use of indicators, you make use of technical, fundamental analysis. We have three basic types of analysis. We have the technical analysis, we have fundamental analysis, and then we also have sentimental analysis. However, in all this, one of the best ways, you don't just trade with your technical analysis. I tell guys the best way to actually trade is to trade with the price action. All right. So candlestick is one of the things that we use that shows us what the price is actually saying per time. Okay, every other technical indicators draws their feet from the price action. So instead of relying on secondary materials, why not go to the primary source itself to get your moves from? Okay, so we'll be looking at candlestick patterns. What patterns actually shows us what to do? All right, there are some patterns you see, and then on seeing it, you know the next candle to expect. You know, all these technical terms, we'll look at them today, we'll see what they mean. All right, and okay, the next one we'll be talking about technical and fundamental analysis. Like I said some minutes earlier, that we have three basic types of analysis. Technical, we have fundamental, and then we have sentimental analysis. All right. We'll also talk about sentimental analysis before we finish that session. We'll talk about developing a trading strategy. All right. How to develop your own personal profitable trading strategy. Okay. We'll talk about trend lines, support and resistance line. Okay. We'll talk about what they mean, how to use them, and how they help us in our trading. Okay. Then we'll look at a typical trade setup. All right, and then we see how to trade profitably always. So let's see how long we can go tonight, okay, before we stop, and then we can discuss on how to continue afterwards. But it's a whole lot package for us, even if what we are doing is just for tonight alone. It's a whole lot, I promise. It's a whole lot that you learn tonight, and then you'll be glad that you're a part of this training session. Okay. So do I have our permission to move on? If you are still following me in the chat box section, type "ride on." In the chat box section, just type "ride on." I need the first three persons to type "ride on," and then we continue in the class. Okay, thank you, David. Thank you, Tolu. Right. Okay, Ebenezer, Adenuga. All right. So we're good. We're moving on. Thank you, Christina. All right. So let's look at this. What is Forex? What is Forex? As the name implies, that we see Forex is spelled F-O-R-E-X. It's a short form for foreign exchange. Okay. It's a short form for foreign exchange. I'm sure that at one point or the other, we've had reasons to exchange money. Okay, you know, you go to that local aboki guy or your street or somewhere, okay, to exchange money. All right, so you exchange, let's say, as our case maybe in Nigeria, you exchange naira to dollar. You exchange naira to pound, okay? And then we all know about the news that is flying around about the rate of naira to dollar, you know, one running away from the other. Okay, so foreign exchange, that's a short form. Now, let's look at this. Forex trading markets and international decentralized financial markets, whereby one currency is exchanged for another. Okay, the Forex market is the largest, most liquid market in the world, with average traded values that can be trillions of dollars per day. It also includes all the currencies in the world. Okay, so the trade in Forex occurs between two currencies. All right, now let me just do a little explanation here. So we are saying here that the Forex market is the largest, most liquid market in the world. So please understand that in this scenario, we are talking about currencies. So when we talk about Forex trading, we are strictly talking about trading with currencies of different countries. And then all these currencies have abbreviations that we use to represent them. For example, I'm sure you can see on my screen, the bottom right corner, you can see Euro USD. Now, EUR is the short form for Euro, okay? USD is the short form for US dollars, all right? We also have some other currencies and their short form, okay? Like we have AUD, which is Australian dollar, but you know, Forex traders, we just call it a short form Aussie dollar, you know? Like we have NZD, that is New Zealand dollar. Like we have JPY, Japanese yen. Like we have GBP, Great Britain pound. Okay, so they are different and they are all three-letter signs, you know. So we just use these abbreviations to represent each of the currencies. For example, Nigerian Naira is represented with NGN. Okay, so wherever you see NGN, you know that we are talking about Nigerian Naira. That is our own currency in Nigeria here. Okay, so the trade in Forex occurs between two currencies. Okay, so what we are doing is we are selling one currency to have another. Okay, so when we say we are trading, then it is an exchange between two currencies. Like the explanation I made the other time, you take your Naira, or let's say, for example, somebody, your friend, or you did a job, or your family member sent you some dollars from, let's say, US, for example, and then you need to change it to Naira. So what you do is you go to the local guy out there that is exchanging money, or perhaps you have a BDC, okay, that's talking about Bureau de Change. You go there, they change it for Naira. They change it for you to Naira for you. Okay, so that means you are exchanging, you are selling dollar to buy Naira. That is what it means. Okay, so we're going to see more explanations about all this. But before we go into more technical terms, it's important for us to understand the basics, the languages that we use in Forex trading, and then what it means literally. So that by the time we start talking about all those figures, all those signs and the likes, it doesn't look so ambiguous, or it doesn't look like a mirage to you, okay? So in our next slide, let's see why trade Forex. Why should we trade Forex, okay? Now, Forex trading is actually a business you can venture into with a very small capital, with a minimal capital, all right? And I advise, a lot of persons have asked me that how much should they start Forex trading with? And I tell them, the response I give is that trade with any amount that when you lose it, don't trade with any amount that you are not willing to lose, okay? For example, I remember when I was much younger, I mean, probably in primary school there, if I misplace 5 Naira, man, I'm going to cry the whole day, okay? And then at the point, when I misplace, if I misplace that same 5 Naira, I won't cry, I won't feel it, okay? At the point, if I misplace 100 Naira, I will feel it, I will cry, you know? And then after some time, if I misplace that same 100 Naira, I will just look like, oh, life continues, all right? At the point in time in my life, I remember in my university days there, if I should misplace 1,000 Naira, man, this guy is going to cry, you know, okay? And then after some time, I was able to overcome that, you know. So what amount do you know that you are emotionally comfortable with? That is the amount that I advise anyone who is starting out trading Forex to start with, okay? And then depending on the broker that you use, the most common minimal amount to start out there is actually $100, depending on the lot size. You know, there are some brokers that use micro lot sizes. Okay, as we proceed tonight, we're going to understand what I mean by lot size. Okay, so why trade Forex? I continue. So number one, you can start with a very minimal capital. Okay, number two, you can work remotely from anywhere in the world. Okay, for example, today I traded from my house here, you know. So wherever you are with your mobile phone, with your mobile device, you can trade, okay? And then with your system, wherever you are, you can also trade, okay? And number three, as long as you have your internet connection. So what is important is your internet connection, all right? And number three here, crisis does not stop trading, okay? So for example, we all remember that last year there was this wave of COVID-19, okay? And there was sit at home for everyone, everywhere, all right, globally. But the good thing is that as a Forex trader, that does not disturb you, that does not stop you from trading. All through the COVID period, all through the lockdown period, traders still trade. We were trading from our home, all right? And like we all know, today is Independence Day in Nigeria, October 1st, okay? And a lot of people are not going to work. The market is not affected. Forex market is a global market. It operates 24 hours, 5 days a week. I hope you get that. So Mondays to Fridays for 24 hours around the clock, the Forex market is active, okay? However, there are different sessions. We have the UK session, we have the US session, we have the Asian session, all right? And then we have the Pacific session, all right? Those are the 4 major sessions that we have in the Forex market. So all these are going on every day. So trades are going on around the clock, Mondays to Fridays, okay? That's why most of the times people invite me during the week to places, or I just want to focus on my trades, you know, because I have quite some accounts that I'm managing. So I want to just sit down with my trades Monday to Fridays. Weekends, I can go out, have nice time with people, but during the week, those are not the times that I go out to meet with friends or play or joke around, except I've met my target for that particular day, all right? So crisis does not stop our trading. Number 4, you can copy trades, okay? So some years ago, about 5-6 years ago, there was this adventure or this rise of social trading, whereby there's a master trader and then we have people who can copy their trades, which means whatever the master trader is doing, your whole account automatically copies it. So when the master trader makes profit, you're making profit. When the master trader peradventure runs at a loss, you also runs at a loss. So it's more like cloning someone's trade. So you can copy people's trades, all right? And then another reason why you should trade Forex is that there are easy rules around it, okay? So out there, we have a lot of people that have made it so ambiguous to let you know that you need to do 100 things before you enter a singular trade. No, that is why we are here. There are ways around your trades whereby there are ways around it whereby you'll be able to simplify your trading process, okay? So typically, when I started, let me just tell us a little. I did a lot of touring around. I faced a lot of people, you know. I'd actually paid people so acclaimed Forex professionals or Forex gurus who will show me screenshots of their trades. And then at the end of the day, I discovered that these people only teach trading. They don't trade themselves with their real money, okay? And I've paid several people. And what I was looking for was someone that actually does these things real, for real. That will be able to hold me by the hand and tell me that, Tolu, this is what to do. This is what you to look out for before you enter any trade. This is where to put your stop loss. Ideally, this is what to look out for to set your take profit. This is the brain behind the risks or your management, the management principles, how to manage your risks and how to manage your money, all right? But at the end of the day, I discovered that none of them was teaching me all this. They all taught me different things. Like they taught me basics, they taught me generalized things, but they were not really specific. They were not teaching me what I wanted. And then at the end of the day, I had to sit down within myself, and then I had to bring all the puzzles together to arrive at my own personal trading style, okay? And then all the students I've trained so far, they found it easy in a way that I actually give them blueprints as per how I do it personally, and then they find it easy themselves, okay? So we're going to be looking at the easier way around it, the easier route, not the ambiguous things that makes you think that, oh, after how many weeks or after many months of learning Forex, at the end of the day, I still can't trade profitably, okay? There's this myth out there that Forex is gambling. Really, Forex will be gambling for you if you don't have adequate knowledge. 3 things are important in Forex for you to be successful in Forex. I tell guys, all right? And I have it as short form. I have it as KPD, all right? Number 1, you need knowledge. You need knowledge. You need to acquire knowledge. If you don't have knowledge and you bust into Forex, you're going to lose your money because it will just look like gambling for you. So if you enter a trade today and at the end of the day you made profit, and I ask you, what did you do? You did not know what you did for that trade to actually end up as a profit. It means that you've gambled, all right? So there's knowledge that is required. Number 2, you need patience, and then you need a lot of discipline. That is the D that is there. So KPD, you need knowledge, you need patience, and you need discipline. Without these 3 things, you won't be successful as a Forex trader, all right? So the third one there, I would like us to be very patient as we go on, even in our training tonight. I hope you are on with me. I hope you are on with me. You can just type in the chat section, just give your feedback in the chat box section as we carry on. I want to be sure that we are all going along in this training. So next we'll be talking about currency pairs. In Forex trading, we'll be talking about currency pairs, okay? Like I mentioned initially, that when trading Forex, we have 2 pairs basically. We are selling one to buy another, all right? We are selling one to buy another. So currencies are traded in pairs as their value is relative to one another. So the first currency shown in the controlling one in terms of placing is the controlling one, okay, in terms of placing your order. For example, now, if you see Euro USD, then you are always choosing to buy or sell the first currency, which is Euro, against the dollar. For example, so in this example that is here, what we have here is Euro USD. So Euro is our base currency, while USD is our quote currency. So if we are to enter a sell trade now for this currency, it means that we are selling Euro to buy USD. And if for this currency pair, we are entering a buy trade, so it means we are buying Euro to sell USD. That's just the literal meaning of this pair that we are seeing here. Okay, by the time we open our chart, you understand better. But I want us to get the literal meaning of what I'm trying to explain here. So we are selling one, we are trading one, all right, against the other. So if we say that we are entering a sell trade for this, it means we are selling Euro to buy USD. And then if we are saying that if we are entering a buy trade for this, it means we are buying Euro to sell USD, okay? And then like I've told some guys before, there's this wave going around about cryptos, and then you see a lot of people asking you, are you doing crypto, or are you in Bitcoin, are you trading Bitcoin or doing this? And I tell guys that a lot of people out there are not actually trading Bitcoin. They are investing in Bitcoin, okay? So, for example, what I mean is this. If at the beginning of this year, you bought $100, okay, with your Naira, perhaps you'll have bought it with around 35,000 Naira, if I'm not wrong, around 35, 38,000 Naira. I posted in my status there, and I told as many friends that actually listened then that all your savings in your account, change it to dollars. I told them January this year, when the year started, after my New Year message, the next message on my status was, friends, your savings, go and change it to dollars, okay? If you did that in January, presently, your money, if you want to go and change it, won't be 38,000 Naira. It will be like 57,000 Naira. So you can imagine, let's say you converted about 300,000 Naira, or let me say 350,000 Naira then to $1,000 then. Now it won't be 380K again, it will be 570K or thereabout. I still asked my BDC yesterday, he told me his rate is 570. So that is investing into the currency. That is not trading. If you are trading, whether it is falling or rising, you know, some guys were very scared when BTC was dropping about 2 months ago. You know, the noise was out there and people were pulling out their cash away from BTC. And they are like, BTC is falling. Tolu, what's up about you? I told them, I said, I'm not investing my money into BTC. I trade currency pairs and I trade cryptos also. So trading is different from investing. So whether it is falling, whether the value of the currency is falling or rising, okay, you can benefit from both ends as a trader. Please, so let's get that straight now. So whether the value is falling or the value is rising, you can benefit from both ends. So how do you benefit from both ends? We see more as we continue in our training, okay? All right, someone said, please repeat the base and quote explanation. So the first one there is the base currency. So we have two currency pairs. There are two of them. Okay, so the first one is the base currency. Is the one that is controlling. The first currency shown is the controlling one. Okay, so it's the one that is controlling the order, and then the quote currency is the second one. All right, so that's just the simple explanation. So what we call them, like those are the technical terms that we use in Forex. There are still other jargons that we'll talk about, just for us to familiarize ourselves with these terms, okay? So the first one is the base currency, while the other one, the second one, is the quote currency. So in this case, Euro is the base currency and the USD is the quote currency. All right? Now let's talk about leverage, okay? In finance, leverage refers to borrowing money to supplement existing funds for investment, in such a way that the potential positive or negative outcome is magnified or enhanced. Okay, therefore, you leverage your account balance to place a bigger trade. Now, what do we mean? If in your account, for example, you have $100 and I give you a leverage of, let's say, 1 to, okay, in this example that we have here, if I give you a leverage of 1 to 20 times 20, 1:20. Now, what it means is that you have the ability to be able to trade with as much as $2,000, okay? And what this means is that if there's a change in value of 0.0030, all right, your profit here will be $6. Imagine trading with something larger. You have a leverage of 200, okay? And the same change in value, that's the value of the pips, all right? The same change in value, but the profits that you earn on both ends are different because your leverage here is higher than your leverage here, okay? And if peradventure, it is a loss of this change in value, all right? It means that for this, you are losing $6, and then for this, you are losing $60. So the same way leverage can help your account to grow fast, in the same way, it can also help your account to, it can also help you or help someone that is naive to wipe out his or her account very quickly. Okay, so now this is where the greediness of people comes in. Okay, so they trade with so much, they leverage so much that at the end of the day, they are losing funds. All right, they are losing their money very quickly. And then at the end of the day, they'll come and tell you that, Forex, I lost all my money trading Forex. Perhaps if you are not leveraged so much, then your money will be saved. Okay, so that is leverage. So all this, we are still looking at them theoretically. Very soon, we'll be going into the chart, into the trading chart practically, and then we see how it looks like trading with a demo account. Okay, trading with a demo account. All right. Okay, so like I said before, please, let's ensure that our videos are off. Let's ensure that our videos are off to avoid distraction. All right, thank you. Okay, now let's talk about margin. Margin is the necessary amount you need to have in your trading account in order to place a relevant transaction or to place a trade. So there's an amount that is required for you to have in your account. If you don't have that money in your account, you cannot place a trade. Okay, so free margin is the available amount of money which can be used to open new positions. So for example, margin is what you need to have in your account for you to be able to place a trade. Now, free margin in this case means that possibly you've opened a trade before. You've opened a trade before and you saw another opportunity with another currency pair. Then you want to open a second trade so that both of them will be running simultaneously. Okay? Free margin, the free margin is the amount of money you have in your account, or the amount of money that will determine how much trade or how much lot size you can use to open a new trade. All right, so it's what will determine your ability to be able to open a new trade. If your free margin is 0, then it means that you cannot open additional trade to your trade that is running before. Okay, so and the simple calculation for your margin is 1 over the leverage size that you are using on your trading account. Like I said before, as we move on, by the time we see our chart, we'll look at all this practically. Now let's talk about PIP. Okay, PIP means point in percentage. It means point in percentage. All right, or price interest point. Okay, so it represents the smallest change in a currency pair. All right, typically it is the 4th decimal point, although many brokers quote using the 5th decimal. All right, but typically it is the 4th decimal point. So when we are talking about, oh, today I was able to make 10 pips off the market. So what we are talking about is this 4th decimal point. How many of it are actually counted? So like in the example that we have here, we have 1.2302. So if this change in value to, let's say, 1.2305, so it means that there's a change in PIP value of 3. So the PIP value, what we consider for the PIP value is the 4th decimal place. 4th decimal place. So please take note of that. But there's an exception for the JPY pair, all right? So for example, we have USD JPY. Any pair with the Japanese yen, JPY means Japanese yen. Yen is the currency that is being used in Japan. So JPY, for example, they go out to the second decimal place. So for a JPY, we don't use the fourth decimal place as we have in others. What we use is the second decimal place to calculate our PIP value, all right? So now let's talk about the bid, the ask, and the spread, okay? The bid represents the price at which a trader can sell the base currency, shown as we see in this illustration here, okay? So the bid is a selling price, that is the price at which someone is willing to sell, all right? And then the ask is the price at which someone is willing to buy. For example, I'm going to bring the illustration to that local illustration that I used for us before, okay? So if you ask your BDC, let's say your cousin sent you $100 from US, okay? And then you need to go and change it to Naira, all right? If you go and meet that your BDC guy or that Aboki guy out there, and then you tell him that I want to change, maybe today we tell you that, oh, okay, I will buy it from you at the rate of, I'll buy it from you at the rate of 560. And if you want to sell, and if I want to sell it to you, I will sell it. If you want to buy dollar from me, I will sell the dollar to you at the rate of, let's say, 570. So the price at which he is willing to sell will be different from the price at which he is willing to buy. The reason is that he also wants to make profit off it. And this applies to every broker that we use. So trading Forex, we use brokers, all right? And then our brokers actually have the price at which they are willing to sell, which is different from the price at which they are willing to buy. And then we need to take note of this, that the difference between the bid price and the ask price is what we refer to as the spread. We refer to that as the spread. So for example, the Apoki guy, if he's buying your dollar from you, he will buy it at a lesser amount, which is 560. And if he wants to sell it, he will sell it for 570. All right, so that at the end of the day, we make a profit of 10 naira per dollar. Okay, so that 10 naira is his own spread. Okay, the difference between the bid price and the ask price is referred to as the spread. So let's say, for example, the bid price is, which is the amount he's willing to sell, is 570. And then his ask price, which is the amount he's willing to buy, is 560. Okay, so the difference between both of them is the spread, is what we know, or is what we refer to as the spread. So that is a layman explanation of what bid price means, ask price means, and then what spread means. Okay. All right. So we move on. So please, let's keep our questions till the end of the session so that the class is not interrupted. We have a lot to do tonight. Okay. So all right, now let's talk about lot. Okay, lot is the way to measure the position size or the volume of a trade. So you hear, for example, if you are close to a Forex trader, you hear a Forex trader asking you or saying that, oh, I'm trading with so-so lot size. I'm trading with so-so lot size. So a lot is what we use to measure the size or the volume of your trades per time. Okay, and then the size of your account will have a long way in determining the lot size you use to enter any particular trade. Okay, so we have different types of lot size. We have the standard lot size. Okay, it causes like we have on my slide. Okay, it means 100,000 causes an approximately $10 per pip gain or loss. So if you're using a standard lot size, then it means for every pip gain or loss, it is equivalent to $10. We have the mini lot size. The mini lot size, it's equal to 10,000, okay? And it causes an approximate of $1 per pip gain or loss. So if you have a pip gain or a pip loss, $1 is what is the equivalent of such, okay? And then we also have the micro lot size, which causes an approximate of $0.1 per pip gain or loss, okay? So all this, by the time we go on to the chart, I'm sure you also understand what this means in practical terms. But just have it in mind that the meaning of lot is how we measure the size or the volume of every trade. The meaning of lot is how we measure the size or the volume of every trade. Okay, now a quick overview on when to actually trade. Okay, like I said before, that the Forex market is open 24 hours a day, but 5 days a week. That is Mondays to Fridays. For example, in our time zone here, okay, the market is open like 11 o'clock. Check your time. 11 o'clock on Sunday, 11 p.m. on Sunday, a new week has started because I think it starts first with the Asian session, all right? So 11 o'clock on Sunday, a session has started already, okay? But all the market closes by 11 p.m. on Friday. So 11 p.m., that's in about 2 hours time from now, all the market will close for the week. All the market will close for the week. So, so 5 days a week, but 24 hours around the clock for all those 5 days. And then trading is not always active during this entire time. There are some time through this week that trading is very slow. For example, if you are trading Euro USD, the bank, that means you are trading, if you're trading Euro USD, then you should be particular about the London session or the UK session, and then you should be particular about the American session. During this period, the market will be very active. But for example, when the American banks are closed and when the London UK banks are closed, it's expected that this currency pair will not really move. It will move. If you are trading with the Japanese yen, then you should pay attention to the American session and the Asian session, okay? So depending on the currency that you are trading, there are some times that there will be little activity on the trades that occur on a particular currency pair, okay? I hope we understand what I'm trying to explain. So it is essential that you know the crucial hours and days of Forex trading when traders are most active. And that is when you make money off the market, okay? So we have the Sydney that you are seeing here. We also refer to it as the Pacific session, okay? The Tokyo that you are seeing on my screen, we also refer to it as the Asian session, okay? Then we have the London session or the UK session. We have the New York session, okay? So these are the different sessions that we have, but this is different. There's a particular app that we can use to be able to know what time is it exactly, which I will share with us after now. I will share the link to the app on our WhatsApp group so that we can download it on our phone, and it will help us to know when or what particular session is actually ongoing, okay? So I'll share with us on the group, okay? And then we have times of the days that the market is very active. Like on Monday, the market is just resuming, okay? So it might not be as active, but the time of the week that the market is very, very active is at the middle of the week. That's like Tuesday, Wednesday, and then the early hours of Fridays. That's between morning and 12 noon. I advise, if you don't want to trade over into the next week, once it's 12 noon or 1 p.m. on Friday, I advise you exit the market and then wait for the next week. Okay, so the green zone on my screen are the best time, or the time that the market is very, very active. On Saturday and Sunday, the markets are closed, or the market is closed. No trading activity. Okay, no trading activity for the Forex market. This is also applicable for those who are trading metals, if you're trading cryptocurrency, if you're trading stocks, if you're trading metals, okay, I mentioned commodities and the like, natural gas. So if you are trading all these, Saturdays and Sundays, the market is closed, except you are trading synthetics index, like volatility index, crash and boom, step index and the likes. Those ones run 247. But for Forex and cryptos and metals, commodity stocks, it only runs from Mondays to Fridays. Okay? And there's an error in the title of this slide. The time not to trade. When not to trade. Now, number one, during the bank holidays. During the bank holidays, it's advisable not to trade. Okay? So when banks are on holidays, don't trade. Okay? Friday afternoons and weekends, please leave the market so that you don't lose your fund. All the traders have already started exiting from the week. Don't be caught unawares. So don't trade. Okay? I tell guys, the idea around trading is this, and I caught this from one of my mentors, all right? One of my investment mentors. He said, it is better not to lose your money at all than to trade or invest and lose your money. So he always emphasized on making sure that your capital is safe, okay? So it might look like an opportunity, but it might be a trap in disguise. So don't trade at these times, okay? And then towards the end of the year, because the banks are already rounding up for the year, and then in fact, majority of the traders are leaving the market to resume the next year. So towards the end of the year, don't trade. Like I give a 1 month gap, all right? So whatever trades that I have done since the beginning of the year till 15th of December, I come out of the trade, and then you will see me again until the 15th of January, okay? So I respect the festive season, okay? Banks are wrapping up for the year. They are checking their account. They are closing their account. And then when January opens, okay, they are just opening their account for the year, all right? Trading activities have just started. It had not really gone into full force. So I advise, towards the end of the year and the early days when the new year is starting, leave the market, don't trade. Okay, so I leave that 1 month gap, 15th of December to January 15th, I don't trade. Then I come back into the market January 15th, all right? Then so that we make profit of the market. Now, another thing is when you are hungry or frustrated, please don't trade, okay? Like I tell guys in our psychology class, we'll talk about this. Okay, if you are still home with us at that time, that for example, you are a day trader, and then you enter a first trade, you run at a loss. You enter a second trade, you run at a loss. I'll advise you, don't trade again for that day. Leave the market and come back the next day, because what will set in is your emotion will set in. There's something inside of you that want to keep entering every opportunity you see that will be like, oh, I've lost money. I want to get my money back. I want to get my money back. You will lose your money. So don't trade when you are frustrated or when you are hungry. Somebody just annoyed you. Okay, please don't trade. Trading works a lot with the psychology. So if you are not emotionally balanced, please leave your chart. That is not the time for you to trade. Okay, so when you are hungry, when you are frustrated, And then another thing is this: when you are very happy, you know, you traded the first time, you made a profit, you entered another trade, you made another profit. I will advise you for that day, leave the market. The third one, anxiety had already set in, okay? And then there are some analysis you do before you enter each of those trades. You are working with your brain, allow your brain to rest, okay? So you need to set guidelines around the way you trade. Tell yourself, these are the times that I will trade. This is the maximum number of trades I will enter in a day, and I will not enter any other trade again. You know, put rules around your trading. That is where discipline comes in. Remember when we started, I talked about KPD, knowledge, patience, and discipline. So that is where discipline comes in. Put rules around your trading style and then stick strictly to it. Don't go against your rules. Don't go against your rules. If you go against your rules, it means you are not disciplined, okay? And if you are not disciplined, you will lose your money, all right? Now, another thing is during the release of new events, all right? For example, I think early last month or the previous month, when US pulled out their troops from Afghan, all right? And then there were a lot of news and controversies. At that particular period of time when that news happened, there was a spike in the market, okay? So at such times, when there's a big news, all right, out there, they also affect the currency. Please don't trade. Just leave the market and then watch what happens next. After 2 hours, you can enter into the market again, okay? So during big news, don't trade, all right? These are people that trade fundamentals, like as we will soon talk about fundamental analysis. So people that trade fundamentals, they trade with news, okay? So when there's a news that is about to come up or a news just happened, please leave the market so that you are not caught unaware, all right? And then by the time the market is closing, don't trade. Like I said initially, towards the end of the day on Friday, for example, anytime from 5 o'clock, 6 o'clock on a Friday, you won't see me in any trade because market is closing for the week already, all right? And then, except you are a swing trader, okay, don't trade overnight because most of the time, during the night hours, the market is not really active, okay? So that it doesn't give you a sleepless night, all right? Now, let's look at this term. We'll talk about the bulls and the bears. I'm sure that a few times we've heard somebody tell us about that, oh, the market is bullish, the market is bearish, or I'm going long, I'm going short, all right? So what does it mean as a Forex trader? Okay, let's familiarize ourselves with these two terms, bulls and bears, all right? Now, for those of us, I like to watch Nigel Wild, you know, I like to watch documentaries, animal documentaries and the like. And then you know that one of the major characteristics of a bear is that when a bear wants to attack, a bear pulls the prey downward, you know? A bear uses the head to pull the prey downward, all right? And when a bull wants to attack, a bull uses the head and the horn to throw the prey upward, all right? So it throws it upward and eats it on the floor, all right? But a bear rather pulls the prey downward, all right? So these are the two animals that represent the market that we use to say that, okay, so when we say that a market is bearish, it means that the market is dropping. So if I tell you that, what does a bearish market means? The picture I would like you to bring to your head is that a bear, when it wants to attack its prey, it attacks it in what direction? It attacks it downward. So if I say that a market is bearish, so what does it mean? It means that the market is dropping or the market is falling. If I say a market is bullish, what does it mean? It means that a market is rising, all right, or a market is going upward. So that is what these two terms mean, all right? So when you think a currency will fall, then we say that, then what do? You sell the currency. So now, like I said initially, remember I told us that when the rate of Bitcoin was falling, it does not affect those who are trading. It only affected those who invested their money into Bitcoin. All right. So at that moment, when Bitcoin is falling, what do you do as a trader? You sell. So you sell or you open a short position. So you either say that, oh, I've just opened a sell trade, I've just sold, or you can just say that I've just opened a short position. All right. So what do you do? For you to be in profit, you sell when the market is bearish. So when you sell, you are said to be bearish. Okay. And then most times we represent it with a red candlestick. Okay. So what we see here is a candlestick. All right. So this is a bearish candlestick. It means that the market opened at the top and they closed below. All right. So this is a bearish candlestick. Another thing that we have here is you can see here that this is the top of this market. All right. We call this higher highs. All right. So this is the higher high here and this is the lower low. Okay. So we can see this market going this way, though it is in more like a channel. However, it is dropping. So this is a bearish trend. This trend is going downward. So this is a bearish trend because it is falling or it is dropping. All right. And then our right side here is the bullish trend. What does it mean? What does a bullish trend mean? It means a trend of a market that is going upward. So when you think a currency will rise, what do? We buy. As long as you are opening a buy position, okay, you continue to be in profit. So you buy the currency or you open a long position. So buy is synonymous to long, as sell is synonymous to short. So please, let's take note of these terms. All right. So if I ask you, what does it mean to open a long position? It means that you are buying. All right. For example, remember I said initially that when the year started, I told my friends that please convert your savings from naira to dollar, buy dollar instead of keeping your money in naira. Because we think that, because when the year started, I had a thought, all right, and during my forecast, I saw that, okay, dollar, the value of dollar will still rise against the naira, okay? And if you had bought it then, you will notice that presently you will still be in profit, okay? Because you bought dollar, all right? And that is because we think that it's going to rise, okay? So you buy. But if you sell and the market goes up and the market rises, then it means that you'll be going at loss. You'll be running at loss. So if a market is dropping, you are expected to sell. If you buy, you'll be running at loss. If a market is rising, you are expected to buy. If you sell at that point, you'll be running at loss. So I hope we understand this. So that's just the literal meaning of how to enter any trade. So by the time we open our chart and we see it, you understand. So if after all your analysis, you discover that, oh, the trend, this market is in an uptrend, it will continue to rise. What are you supposed to do? You buy. If after your analysis on a particular chart, in a particular day, or on a particular day, you discover that, oh, the market today is bearish and this thing will continue to drop, what are you supposed to do for you to be in profit? You sell. If at that point you buy, then you'll be at loss. Okay, so that is the literal meaning on, or the literal explanation on how to trade Forex. Okay, so you need to first be able to ascertain, is the market bearish or bullish? If it is bearish, then it means that I am supposed to look for selling opportunities. If the market is bullish, then it means that today I'm only supposed to look for buying opportunities. If in a bearish market, all right, you buy, you'll be running at a loss because the market will go against you in the long run. I hope we understand that. All right. So let's move on. And then when reading our chart, there are different charts that we have on our trading platforms. Okay, like I told us initially that for the sake of this training, we'll be talking strictly about the MetaTrader 4 platform, which is the MT4 platform. Okay, we have the line charts like what we have here. Please, if your video is on, stop the video. Please, if your video is on, just stop it. Stop the video, please, if your video is on. All right, so we have the line chart, we have the bar chart, and then we have the candlestick chart. Okay, so most times you see this candlestick chart here, that is what is most commonly used. Okay, so we see here this green candle here means it is rising. Okay, this one means it's falling. Okay, rising, falling, rising, falling. All right, that is how the market actually moves. The market does not move on a straight line. Okay, the market moves in more like a zigzag, 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 zigzag form. All right, so so all what we have on this three chart here, they are like the same thing, but in different ways. So the same thing that is here on this line chart is the same thing that is here on this bar chart, and it's the same thing that is here on this candlestick chart. All right, so that is the different charts that are being used. Okay, so but most particularly what we'll be looking at is the candlestick chart. We'll be learning with the candlestick chart. We'll see what candlestick is, how to use candlestick. We'll also be talking about the candlestick patterns, how to trade with the candlestick by price action. All right, okay, now so let's talk about tips for successful trading. So you want to be a successful trader, what are the tips that you need? All right, number one, start small and grow big. I tell guys, never start trading with the money that you can't afford to lose. Any money you want to start your trading with, make sure that you're emotionally comfortable with it. If you are not comfortable with it emotionally, please don't trade with it. You understand? Because by the time you start trading with that money, your heart will start racing. And then at the end of the day, emotion will set in so much that you will lose your money. Okay? So don't trade with any money that you are not emotionally comfortable with. That is why I advise, start small and grow big. Okay? So personally, I started trading with $100. There was a time when I wanted to test volatility index after trading demo. The first money I added to that account, even though I had more than that, was $10 because I want to test it to see how it is like first before I put in much into volatility index. All right. So trade with something that is very small, you know. So I traded $10, I traded $100, I traded $500. I could remember the first time I started trading with $500, you know, my heart was racing, but I was stable enough because I was able to grow over time. I'd grown from 100 to 200, 300, 500, all right? I traded with $1,000. I traded with $10,000, and presently I'm trading 6 figures. Okay, so it depends on you. You need to be emotionally comfortable with whatever amount you are trading with. So you start small. If you just start big, you might end up losing that money. Okay, and then when you lose that money, it will demoralize you, it will discourage you, and you might not be really encouraged to start again. Okay, so start small. And reason is that if you start small and you make mistake and fall with that small, it will be easy for you to stand up again. Okay, like somebody made an example. He said, if you are walking and then you fall, it will be easy for you to stand up compared to somebody that is running and fell. All right, and compared to somebody that is flying and fell. Okay, so start small, and then as you begin to learn and gather experience and gather more knowledge, okay, you can now begin to increase your account. All right, now number two, always use stop loss order. So in every trade that you enter, there must always be a stop loss order. That is, I'm trading, my account size is, for example, is $100. So, and I am trading, my stop loss order will possibly be at a value of $1, so that even if the trade should go against me, I won't lose more than $1 out of my entire account. Okay, and then so it means that I am risking 1% of my account size. All right, so always make sure that there's a stop loss order in your trade. That is how you'll be able to trade with confidence, and you won't blow your entire account. Somebody said, oh, I entered a trade and then it wiped all my entire account. That is because perhaps you did not put stop loss order when you open the trade, or you leverage so much, or your lot size was so big. Okay, so always put stop loss order in all your trades. Number 3, stick to your strategy. Okay, one of my students that is presently learning, he had developed a strategy for himself, and then 3 days ago he called me. He said that, Tolu, I just saw one strategy from somebody today, and that strategy is, he made also amount from him. I told him, I said, every strategy, as long as you are sure about it, works. Okay, what you need to do is to discipline yourself and stick to your strategy and learn it and be a master of your strategy. If you are a master of your own strategy, it will work for you and you make profit of it. Okay, 2 of us can be using the same strategy and I'll be making profit while you are running at a loss. It's not because the problem is not with the strategy. The problem is with the individual that is using the trading strategy. You understand? So get a strategy that works, master it very well, stick to it. Don't poke nose into other people's matter, all right? Leave them. Let them do their, you are all running a race, you are all running similar races, but on different paths, all right? So work with your own, stick to your own strategy and be a master of your strategy to succeed in your trading career. All right, number 4, do not stop the profits. Okay, like I think this one will be more explanatory by the time we see the chart. All right, so you open a trade and then the trade is going in your favor. Don't be in a hurry to take your profit and go away, because you'll be in a way, you'll not be happy if you discover that you are trading, you went out of the trade on time, and then if you had waited a little bit more, you'll have made more money. All right, so don't be in a hurry to stop the profit. Allow it, ride on with the profit and enjoy all the profit you can enjoy until you discover that the trend is changing. All right, that's where you should come out of it. Okay, so do not be in a hurry to come out of the trade. Okay, number 5, always follow the trend. Don't trade against the trend. For example, if the trend in the market is bullish, please, I advise you, and that's what I tell all my students, make sure that you only look for buy opportunities. Don't sell when the market is bullish. If the market is bearish, only look for sell opportunities. Don't buy when the market is bearish. Okay? I can see messages here. Somebody saying he can't hear me. I hope you can all hear me now. Can you all hear me? Please, if you can hear me, I need you to drop in the chat box section that you can hear me. In the chat box section, please, just type, I can hear you. So we continue. Okay. All right, good. So we continue now. Thank you. All right, so number 6, avoid emotional trading. This cannot be overemphasized enough. I've mentioned it again and again since we started, that you don't bring in emotions into trading. So if somebody just broke your heart, please don't trade at that time. All right. So don't trade when you are feeling emotional, when you are angry, when you feel heartbroken, when you feel tired, when you feel anxious, when you feel happy, when you feel so excited, anything emotion, please don't bring it into trading. Avoid emotional trading, because if you bring in emotion into trading, you're going to lose money. Okay, number 7, close unsuccessful positions. So don't continue to trade when you see that the trade is going against you. All right, make sure you have your stop loss, and then don't move your stop loss backwards, hoping that it is still going in your favor. No, if it is not successful, it is not successful. Allow it to close you out, and then calm down and wait for another better opportunity. All right, so close unsuccessful positions. Number 8, study the Forex chart very well. Okay, so be a friend of the Forex chart. All right, so every day, for about 2 years, every day I look at the chart, except for some Sundays. All right, maybe I go to church and come back very tired. But even on Saturday, I take time to study the chart. I look at the trade of the week. I look at my trades of the week. I look at the chart of the week. I look at the trends of the week. I look at how the market have moved in the week, you know. So make sure you study the chart. Why did I say you should study the chart? I believe all of us, probably when we were in schools, all right, in university, or maybe when we were studying for WAEC or for external exam, we used to read past questions. Why do we read past questions? Because somewhere inside of us, we think that there's possibility that the examiner will repeat questions, all right? The same thing applies for Forex. There's that saying that says that history repeats itself. That is Forex for you. So if it had happened before, there's tendency that it will happen again. So if you study your chart so much, there are some price action patterns that you'll have seen in the past. If you see them happen again, you'll have already known what to expect next, all right? So you need to be a friend of the chart. Let your Forex chart be your friend. Study the chart very well if you want to be successful. Study the chart very well, okay? Study the chart very well. And then number 9, avoid greed. Don't be greedy. Don't try, you know, I saw someone last 2 weeks started, okay, I had a convention 2 weeks ago, just before the convention. Someone that's the first week of September, chatted me up and told me that, Mr. Tolu, I have a strategy now. You can make between 30 to 50% or even more of your account every day. You know, you can risk if you are sure of your strategy, then you should be able to risk 30% of your account size. Then I looked at him and laughed. I said, you need to go and check your strategy again. There's no 100% perfect strategy. For example, what if it is that time that strategy does not work out and then you lose whooping 30% of your account? How will you feel? You'll be demoralized, and then that might make you lose more money. But what do you think if you have $100 in your account, then you enter a trade and you run at a loss? At the end of the day, what you lost was just $1. You still have $99. That means you still have 99 other opportunities to enter trades and make profits. Okay? So what I advise is this: risk 1% of your account for about 3 or 2% or 2% profit. So that's ratio 1 to 2 or ratio 1 to 3. Okay? That is wisdom. Rather than saying you want to risk 30% of your account so that you can make 100% in a day. That is how people blow their account. So avoid greed. Don't be greedy. If you are greedy, you will lose money, and then you'll be part of the people that are campaigning about that Forex is not good. Okay? Forex is good. It's making a lot of people every day. All right? A lot are earning from Forex every day, but you need to avoid greed. Okay? Something you need to understand about the Forex market is that money is never lost. If Mr. A trades Forex, if we only have 2 people trading Forex, or we only have 2 people in the market trading, okay? If Mr. A loses his money, it means that Mr. B had made that money that Mr. A lost. You understand? So if you enter the forex market today and you made a loss, that your money that you lost, somebody else made it as profit. Okay, so the money did not disappear. We have, for example, in a day, if we have 1 million people in the market, and let's say 900,000 of them made loss, it means that all the money that all the 900,000 people lost, the 100,000 remaining people that made profit, they were the ones that made those money back. All right. So no money is lost. Okay. If you think you are running at a loss, you need to go and check yourself, check your strategy. All right. And check your approach very well, because that money you lost, somebody else made it as a profit that same day. So I advise you, avoid greed. If you want to make 200%, you want to double your account in a day, I tell you, you might end up blowing your account in a day. Okay. And number 10, stay disciplined to your trading strategy. Stay disciplined. If you are not disciplined, you will lose money. If you are not disciplined, you will lose money. Okay. Now, let me give us this analogy again. As a trader, let's say I sell gadgets, I sell iPhones, all right? There are times in life, there are times in my business that I might make profit, and there are times that I might run at a loss, okay? So, but what is important is that my profits are more than my losses, all right? You agree with me? The same thing applies for a Forex trader, okay? There are times that you make profit, there are times that you run at a loss. But what is important is that your profits are more than your losses. So if you look at your the breakdown of all your trades in a month, for example, there's tendency that, let's say you open a $100 account, and then in that month you made some losses. Total loss that you made in that month was, let's say, $5, and then total profit you made in that loss, total profitable trades you made in that month was, let's say, $15. By the time you remove your losses from your profit, 15 minus 5, that's 10. So at the end of the month, your closing balance will be $110. Have you made profit that month? Yes. You just made 10% of your account. That is good enough. So don't expect that every day of the week or every day of the month you are always in profit. No, there are some days that you might run at a loss. Okay, take it as part of the game. All right, take it as it happened. All right, then you move on. The next day is there. There are always opportunities to make profit from the forex market every day. Okay, but make sure you stick to your trading style. Make sure you stick to your strategy, and at the end of the day, you make your profit off the market. Okay, we've been talking for over 1 hour now. All right, and then this is for people who are busy and then doesn't really have the time to trade. Why not? There are social trading platforms out there that you can copy people's trades. Okay, so if you go to FXTM, like I'm a strategy manager on FXTM, you can go to FXTM. Okay, you copy trades. You can go to FBS. There's Octa Forex. I'm sure that majority of us will have heard about Octa Forex. They spent a lot on adverts, or they've been spending a lot on adverts. All right, so there are different platforms like that. eToro, you know, there are different platforms that you can copy the trades of master traders, and then you make profits as they are making profits. Just make sure that you study their chart very well. Make sure they are consistently profitable before you invest into their strategy. And then at the end of the day, you can make profit even without actively trading yourself. Okay. And then, okay. All right. So that is what I have in this first leg of our training for tonight. All right, so let's ask our questions. Let's ask our questions. Let's ask our questions before we go on. This is almost 9:30. All right, so you can unmute if you want to, and then let's ask our question. Are you on with me? So you have questions to ask. Let's ask the questions quickly before we go on. Are you on? So, okay, if you're on with me, just type in the chat box section right on so that we can continue. I'll give us some materials that we use and then we forge ahead. So if you're on with me, just type right on, you know, the chat box section.
Good evening.
Yeah, good evening. So
Okay,
your name and then you go on with your question.
Okay, this is Ebenezer. I want to ask, is it possible and is it advisable at the same time to copy a trade from one trading platform or one or more trading platform, like sorry, 2 or more trading platforms, and then use it?
Can you rephrase that? Copy trades as well. What do you mean?
Can I, like you said, I can invest with I can copy someone's trade on FXTM. Can I copy on FXTM and copy on another trading platform like that?
Yeah, sure. So if what you want to do, you don't want to be an active trader yourself, all right? So you can go on different platforms and then it's your money that is speaking there, all right? So you can go on FXTM, look for very good strategy managers and then copy their trades, okay? You invest with each and every of them. All these platforms have the minimum amount for investment, all right? Then go on another platform again, check. What you just need to do is make sure you study their past trades very well to see, to be sure that, okay, this person knows what he or she is doing, all right? Mind you, past trades does not determine future performance, all right? So, because these things happens, all right? So, but make sure you are sure of whoever you are investing into a strategy because it's your money, not their money.
Can I have access to their strategy and not just trade with them so that I can copy their strategy?
Can't, of course, because they are trading themselves. So what you only see is the graph that shows the results that they have obtained. You can't see anyone's strategy except he or she shows you or teaches you.
Okay. Yeah. Thank you.
So who else? Somebody else have a question? Okay, Tolu Olayi Sade is saying that can a bearish market go bullish at any point during a trade? Okay, so depending on the time frame that you are trading on, okay, so like I said initially that the market does not just go in a particular direction. It moves in zigzag form, okay? It goes up, down, up, down, up, down, up, down. But just that if it is a bullish market, the rate at which it will go up will be more than the rate at which it will pull back, all right? So we see it will trend up, it will go upward, and then it will pull back a little, and then go upward again, and then pull back a little. I hope you get what I'm trying to say. So, so that way you know that, okay, this thing is going up more than it is coming down, right? But it will get to a point, so possibly it will get to a resistance level whereby the trade will turn totally and then it will start coming, the trend will change from a bullish trend into a bearish trend, all right? So we have resistance zone, we have support zone. So those ones we'll still talk about it when we get to the support and resistance section. And then you said once it goes bearish, it stays that way all through. Okay, depending on the volatility of the market at that particular time. Okay, so until it gets to a strong zone, we usually have pullbacks and then trends changes, but this happens at major zones. This happens at major zones in the market. It happens at major zones in the market, right? All right. So tonight, what we are going to do is this. Okay. I had a class about a month or two ago. All right. Similar to this. So I'm going to give us the opportunity, because we've joined this class tonight, I'm going to give us the opportunity to watch those recorded sessions. Like this session that we have tonight now is recorded, and then we'll all be able to watch it after now. All right. So I'm going to share the link to watch this other video on the trading platform MT4. I will share it with us. I'll share the link on how to create a trading account. It was a class like this that I took. I'll share it with us. And then I'll share the link of the trading psychology. I'll share it with us. And then that of risks and money management. I will share all those with us. And then other ones that I find in my database, because time is fast spent. I've been talking for about an hour, 30 minutes now. So I'm going to share with us, and I will expect feedback from us. Now, I would like us to, as mature minds, the group that we have opened is strictly for this training purpose. If anyone posts anything out of what we are learning, the person will be removed from the group and you won't be able to join again. Okay, so I will share the links on the group. We are expected to join the group to watch the videos and give feedbacks or after watching the videos. I hope to see us being profitable. Now, Nigeria today, we are celebrating independence. I want to see some of us to also have financial independence. And then, so I will share the links with us on the group. However, there might be some persons amongst us that might be willing or we want to have a one-on-one training session with me. Why not? I also run training session, one-on-one master classes with my students. Okay, I take you through more in-depth curriculum than what we even have on my slide here. We go through it within 2 weeks. We have 10 days. So we go like 2 hours every day for the next 10 days. That's 2 weeks. We go through it together. Then I'll also show you how to access big funds from prop firms. All right. I've been able to access such funds. And what that will do to help you is that you can imagine trading with $100 and you make 1% in a day. You make 1% of $100 in a day. That means you've made $1. But you can imagine trading with $100,000 and you make the same 1% in a day. That means you've made how much? That means you've made $1,000 in that same day. So the difference is not really the difference is the same peak value, but because the money you're trading with is bigger than the other, right? That is why you're making that much. So I have a one-on-one master class that I have my students. I prefer a one-on-one master class because it helps me to understand the uniqueness of the student. Why not? If you're interested in that, you can just message me. For those of us who are part of this, I'm giving us like more than 50% discount on that masterclass. All right. So just message me personally or just send me masterclass. All right. Send me masterclass. Send it to my WhatsApp line. It will send you, you get all the details, and then we can fix a time for this, and then you'll be a part of it. All right. So thank you very much for tonight. I think I need to go and take a glass cup of water and relax for tonight. Then I'll share the links with us on our closed WhatsApp group. Okay. And I look forward to hearing from us all. So I'll also share with us how to trade with our mobile device. I had a training that I did. I'll share with us how to trade with our mobile device, how to set it up, how to connect the account, and how to enter simple trades with our mobile phone. So whether you are using Android or you are using iPhone, I will share those videos with us, and I hope that all this will help us a long way. So thank you very much for your time, and we'll see at the other hand in on the group. Regards.